Good afternoon, everyone. Welcome to another episode of BayView Views. I'm Mark Dutram. I'd like to speak on topics that reflect a lot of what we're hearing from clients and then probably what you're hearing from in the media. So the dollar, which comes up periodically, has certainly depreciated this year. And now you've got everybody jumping on the bandwagon that, the dollar is going to have no value. It's going to lose its currency status in the global world. And I want you also to remember something. I just thought of this, but remember the message also resonates with things that people are trying to sell you, like an alternative to the dollar. That could be gold, that could be crypto. And because these things would provide you with the protection in the event of the dollar's demise. But that's another video altogether, right? So let's take a few minutes and just understand why, despite global uncertainties and certainly the periodic headlines, the dollar remains the backbone of the global financial system. So first of all, we look at the spot index. We can look at it again from different time periods, but the dollar index, when you look over long term, tells really a clear story. While it's pulled back slightly from its recent high, I think it was hit maybe 109 recently. The current level is rated around 100, 99.4, and that is really still historically strong. So if you look at a long-term chart, the dollar today sits well above levels seen during much of the 80s, the 90s, and obviously most of the 2000s. And this sustained strength underscores the global confidence in the dollar as a stable store of value. And again, we'll talk more about that. The other thing people worry about is its reserve currency, right? So if you look as of the end of year 2024, the dollar still made up, I want you to think about this, 60% roughly of official global foreign exchange reserves. So that means what people are holding to, protect their own assets. And that's way above, like the euro, I think, is second at around 20%. The yen, again, only about 5.8%. And the yuan, just 2.2%. So although this is down from the 71% seen back in probably about 2000, the decline really reflects diversification into other minor currencies, not really a loss of trust in the dollar. There's not even a close second if you think about it, and there's simply no viable alternative today that matches the depth and the liquidity and really the rule of law foundation that is, U.S. markets that they provide. When we look at the share of global transactions the dollar makes, it's incredible. The dollar is unmatched in foreign exchange markets. It's involved in roughly 88% of all global transactions, nearly unchanged for really decades, despite the euro's launch and despite the rise of China. And this dominance is rooted in the dollar's role as the default medium for global trade and international finance. Something that people often forget about too is if you look at what we call the yield differential, and that's the interest rate over that the dollar that our treasuries are paying, is really a big differential, right? So as of April 2025, the U.S. Treasury yield, the 10-year Treasury, offers a meaningful premium over rates in Europe or Japan, almost a 2% spread. So for global investors, if you're thinking about that, if they're seeking safe returns, U.S. bonds remain really attractive, and continued demand for dollars to purchase these securities is going to be, something that persists. That demand serves to reinforce, again, the dollar strength. We talked about in the beginning, so we do see this year a weakness in the dollar, and it has softened this year. I think it's about 8% off its high as of this filming. And this is likely kind of a short-term reaction. I want you to think about this. The trade deficit expanded significantly this year, right? Q1 2025. And that was driven a lot by kind of front-loaded imports. Why? We anticipated all of the new tariffs, and this prompted kind of U.S. buyers to accelerate purchases before higher prices kicked in. So what does that do? So this not only boosts demand for foreign goods, but it also floods the markets with US dollars. We should have anticipated and expected to see the dollar depreciate short term just based on simple supply and demand characteristics. But longer term, again, tariffs tend to support the dollar by reducing imports, increasing foreign demand for US dollars, and again, this should continue. So to sum it up, the dollar remains strong, not by default, but because the US economy and our institutions and our markets remain really second to none and very resilient. The dollar's role in global reserves and trade and investment isn't going away anytime soon. And as long as the US yields offer a premium and the country remains the destination for global capital, the dollar is going to continue to stand pretty tall. People do have a reason to worry about levels of deficit spending. So again, I don't want to diminish that. And our government continues to practice that. Again, even here today, we were hoping conservatives would again, take the path of, again, more a balanced budget. And this does obviously threaten the dollar. If you continue to go down that path and have too many dollars out there, you should depreciate it over time. But that is another video in of itself. But I hope this helps. Again, in watching, the dollar is still very strong, remaining that way. But thanks, guys, for watching another episode of BayView Views. Have an awesome day.